Price divergence in relation to the indicators, like when we have a green candle with indicators pointing down, that's price divergence. And you can have the opposite as well, with indicator lines pointing up on peaks and having a red candle. And so I want to identify what this divergence or some of the things that you can look for and supporting evidence that will work in this when you identify something like this. In this example here, again, I have the normal chart up with the price chart in the middle here and the zip chart down here. I am in Tesla, and I'm in March of 2017. On this day, we obviously have a zip green candle, a zip green indicator line with a green candle, and I have it identified on this green vertical line at the moment, on both charts, I might add. When we see this, we have several patterns down here. For example, in the green chart, we have a red-green twin bottom. That means a red spike and a green spike, and this one is 1 day apart. And the other pattern that we have is 2 days apart. Over here, we have a red-green twin pattern, and what it means is that it's the next day up. And so on this one here, we have a gap up actually that takes place. And over here on the green line, we have a small red spinning top the next day. And one of the reasons that we have that small red spinning top is right here in the zip chart. We have zip Zion highest. And we know that when zip Zion is highest, it moves price down. And it especially moves price down when it goes down. Zip Zion can go flat or go up, and price will still go down, but not always. But very seldom will you see the price not go down let me rephrase that. Very seldom will zip Zion be going down and the price will not be going down. It's highly unusual. Now, this price divergence with the indicators is something that you often will, or you can see it more often when the green candle is under the previous close. In other words, it gapped way down and then you have a green candle. But you do have the mixed indicators here, and so when we're contemplating trading the next day, we look at what we see, and we know that this is going to go down one more day, or we anticipate it's going to go down one more day. From looking at the zip Zion line, we also anticipate that it's going to go up based on the red-green twin spike. If we look over here on this same day, we have trend red that's already in a BOC going back up, and we have the power Zion that has crossed over the green, and we also have the swing Zion in pink that have crossed over the green. And as you can tell, the swing lines are moving up, the red and the green short-term trend lines. And if I expand this a little bit, you can see that the power green is above the orange, but the power green on this day is at 0.59, and the orange is at 0.42. And so they're really close together. When you've heard me talk about the gaps up patterns, you've heard me tell you about the close proximity that power green and power orange are at. And most of the time when you get gaps, power green and power orange are less than that's 0.15. A lot of them are 0.03 or 0.07, or So from this perspective, we don't see it. It doesn't qualify like we do see for a gap, but it does qualify for being above zero and green above orange, which is indicative of the start of an uptrend. It was back here on, this is the first day back here, 3 days back, that the power green crossed over the power orange. So again, those two lines are the 2 out of the 7 short-term trend lines. They tell us approximate directions. They are slower moving lines, but we can't use them to look at daily up-down price movements. But we can look at general trends, and we see that over the next 12 to 15 days, price goes up significantly here. Goes from about, looks like about $260 to over $300 in a few weeks. So that's an example of a little bit of a mixed set of indicators, but the vast majority of what we see is telling us that it's going up. You're obviously going to wait for what happens, and that because the day after this green candle right here is a red doji, or what looks like a spinning top, if you will, red spinning top. Without checking the 1 minute or 3 minute charts, I can't tell whether it was truly a red candle or a green candle in theory, but whatever the case, we do have on this day after the green line, we do have a TOC higher pattern after the bottom, which is very typical again of an uptrend. And as a result of that, if you were looking at this day and contemplating what we see and what we don't see, we obviously identify with the second day of a 1 day twin red-green peak or spike. And we also see that in this example, red and green in the price chart have separated themselves significantly from power blue. Just like in these examples up here, when power green and power red are high and they stay up high, the price of the price moves up, or in this case here they remained flat, they stayed high. And even though you had 4 days of a battle between the bears and the bulls, the ultimate decision to stay in that position would have paid off if you were swing trading or whatever you may or may not have been doing. The other thing I'll point out real quickly is right down here in the power chart we had what we refer to as a pink diving board, and that's when the pink line sticks out past the green. When the green zip green goes down, remember pink usually, I mean the vast very seldom do we see pink diving boards. That's kind of why I bring this to your attention. It's just a reflection of a fair amount of power within the system that within the market forces that are keeping the price where it is. You can further see that if you look down here in the zip red chart. Zip red right now here, keep in mind it spiked down to 41, and then it did a low angle down to 36, and now it's done a second day low angle down to 34. Zip red is a super fast line. Zip red and swing pink are the two quickest lines in the entire system, and when it can't even get down to under 30, you know that there's something keeping it up, and that reflects itself in a reversal pattern. And as you know, the entire day trading Visual Basics system is built on reversal patterns or cycle tops and bottoms. And we do this because the power movements at the turn of the cycle are typically stronger in the first or second day. Sometimes you'll get two nice movements. Then the third day will be the biggest, but you can obviously recognize that when you look at a trade. So that's what we see in this example of a price divergence, and that is with a green candle with indicators going down. In this case, zip green going down to 0 and pinpointing. Hope this you had a chance to pick up some additional information on what I have disclosed here. You can see the market movements. You can read the indicators and identify with what's happening or about to happen in the marketplace. Just watch more videos. I encourage you to do that, and the videos on market strength and the videos on gaps are excellent as well. And don't forget to look at the documents index. There are all kinds of printed information that all kinds of information, document information that you can print off, and like colors of color box color codes and just a variety of things. So lots of information, very detailed system. But you need the detail to recognize those tiny market force pushes that occur before the big price movements occur, because that's when you want to get into the position. You want to be there before the big move takes place. It's exciting, isn't it?